In the world of crypto, you'll often hear two main terms, Bitcoin and altcoins. These are the building blocks of the cryptocurrency universe, and understanding the difference is key for anyone interested in digital assets. Bitcoin is the original cryptocurrency, launched in 2009 by the mysterious Satoshi Nakamoto. It was the first to solve the problem of digital money, and everything that came after is considered an altcoin, short for alternative coin. Altcoins are essentially any cryptocurrency that isn't Bitcoin. Think of Bitcoin as the pioneer, blazing the trail for all others. Altcoins are like new brands or startups, each trying to improve on Bitcoin or offer something different. Some altcoins aim to be faster, more private, or more energy efficient, while others experiment with new technology or business models. For example, Ethereum is an altcoin that enables decentralized applications and smart contracts, opening up a world of possibilities beyond simple payments. Other altcoins focus on making transactions quicker, cheaper, or more secure. And some are designed for specific industries like finance, gaming, or supply chain management. There are meme coins like Dogecoin and Shiba Inu, tokens used in video games, and coins that help track products as they move through supply chains. All of these fall under the broad altcoin umbrella, showing just how diverse the crypto space has become. Altcoins offer more variety, and often more risk, than Bitcoin. Their prices can swing wildly, sometimes rising or falling by double digits in a single day. Many investors are drawn to altcoins for their potential to deliver huge returns, but this volatility means you could see big gains or big losses in a short time. The excitement and unpredictability are part of what makes altcoins so appealing, and so risky. For every altcoin that succeeds and becomes widely adopted, there are many more that fail or fade away. That's why doing your own research is crucial before investing in any altcoin. Look into the project's team, technology, and real-world use cases. Before picking altcoins, it's important to understand Bitcoin's dominance. Bitcoin's price and market share often set the tone for the entire crypto market, influencing how altcoins perform. In many cases, Bitcoin's movements are the key to knowing when altcoins might shine. If Bitcoin is strong, altcoins may follow, but if it drops, altcoins often fall even harder. Always keep an eye on the bigger picture when exploring the world of altcoins. Bitcoin is the foundation of the crypto world, with unmatched security, trust, and recognition. It's the digital gold, the first stop for new investors and institutions. Bitcoin's liquidity and stability make it the market's anchor. When Bitcoin rises, it often sparks the start of a bull market. Its price movements set the mood for the entire crypto space. If Bitcoin falls, altcoins usually drop even harder. Sustainable altcoin rallies rarely happen while Bitcoin is in a downtrend. Investors wait for Bitcoin to show strength and then move sideways before shifting to riskier assets. Understanding this flow is key to navigating crypto cycles. Bitcoin dominance, or BTCD, measures what percentage of the total crypto market is in Bitcoin. High BTCD means most money is in Bitcoin, usually during early bull runs or bear markets. When BTCD falls, altcoins are gaining value faster than Bitcoin, a classic sign of altcoin season. A rising BTCD signals risk aversion. A falling BTCD shows growing risk appetite. Watching BTCD is essential for timing the altcoin market. The real altcoin rallies begin when Bitcoin's price stabilizes and BTCD starts a clear downtrend. This shift signals capital is rotating from Bitcoin into altcoins. That's when the broad altcoin rally typically begins. Money in crypto moves in cycles, creating a rhythm that shapes the entire market. These cycles are driven by investor psychology, market sentiment, and the constant search for higher returns. Understanding how capital flows through the crypto ecosystem is key to navigating its volatility and seizing opportunities. It all begins with capital flowing into Bitcoin, the original and most trusted cryptocurrency. As new money enters the market, Bitcoin's price surges, often attracting mainstream attention. During this phase, altcoins typically lag behind, as most investors see Bitcoin as the safest entry point. As Bitcoin rallies and then starts to consolidate, experienced investors look to maximize gains by rotating profits into large-cap altcoins like Ethereum. This shift is often gradual, as confidence grows in the broader market and traders seek higher potential returns. This is when ETH-BTC shows strength and BTC-D, or Bitcoin dominance, stalls or dips. These indicators signal that capital is moving away from Bitcoin and into other major coins, setting the stage for the next phase. Next, profits cascade into mid and small cap altcoins, sparking explosive gains across the market. This is when the most dramatic price increases often occur, as traders chase the next big winner and speculation runs high. This is the true altcoin season. High risk, high reward, and falling Bitcoin dominance. The market becomes euphoric, but volatility also increases, making it a thrilling yet dangerous time for investors. Eventually, the cycle cools. Smart money begins to take profits, moving back into Bitcoin or stablecoins to lock in gains and reduce risk. This transition is often subtle at first, but soon becomes obvious as momentum fades. Altcoin prices drop sharply, while Bitcoin holds up better. Many latecomers are left with losses as the market corrects, highlighting the importance of timing and discipline. Bitcoin dominance bottoms out and may rise again as capital consolidates. This signals the end of the cycle and the potential start of a new one, as investors prepare for the next wave. This four-stage cycle repeats with each new wave of capital, shaping the crypto landscape and offering fresh opportunities for those who can read the signs. Understanding this flow helps you spot the right time to shift between assets, manage risk, and make smarter decisions in the ever-evolving world of crypto. If you look back at the history of the crypto markets, you'll notice that altcoin seasons tend to follow a recognizable pattern, almost like clockwork. These cycles aren't just random events. They're shaped by the flow of capital and investor psychology. Take 2017, for example. Bitcoin reached new all-time highs, grabbing headlines and attracting a flood of new money. But after Bitcoin peaked, something interesting happened. Capital began to rotate out of Bitcoin and into altcoins. As a result, Bitcoin dominance dropped sharply, and many altcoins experienced explosive gains, with some multiplying in value within weeks. Fast forward to 2020 and 2021, and we saw a similar story unfold. Bitcoin led the charge, rallying hard and drawing in global attention. After a period of consolidation, altcoins took the spotlight, with Bitcoin dominance falling and a broad altcoin rally taking off. This repeating pattern is a hallmark of crypto bull markets. These cycles are triggered by a strong Bitcoin rally, which injects fresh liquidity and confidence into the market. When Bitcoin surges, it acts as a magnet, pulling in new investors and capital. Without Bitcoin's initial surge, there simply isn't enough momentum or capital to fuel a broad-based altcoin rally. Altcoins need that spark from Bitcoin to ignite their own runs. The pattern is clear. Bitcoin rallies first, then consolidates, and only then do altcoins begin their explosive moves. This sequence has repeated across multiple cycles. Understanding this sequence is far more valuable than trying to predict exact prices or dates. It gives you a framework to anticipate what might come next. The flow from safety, represented by Bitcoin, to riskier assets like altcoins, is the heartbeat of the crypto market. It's a rhythm that repeats as confidence grows. Watch for Bitcoin to take the lead, then for capital to rotate into large-cap altcoins like Ethereum, and finally into smaller, riskier altcoins as the cycle matures. By recognizing these repeating patterns, you can better understand, anticipate, and navigate the ever-changing crypto landscape. Ethereum is the bridge between Bitcoin and the altcoin market. It's usually the first major altcoin to attract capital after Bitcoin's rally. When Ethereum outperforms Bitcoin, it signals rising risk appetite and a possible altcoin season. Analysts watch for Ethereum to break above key technical levels, like the 2-week Gaussian channel midline. Historically, such breakouts have preceded massive altcoin rallies. As of mid-2025, Ethereum is showing strength and reclaiming critical levels, putting analysts on alert. If ETH sustains momentum and breaks major resistance, it could trigger a sharp drop in Bitcoin dominance and open the floodgates for altcoins. Still, caution is needed. Technical breakouts aren't guarantees, and on-chain data can reveal hidden risks. The real signal is a sustained ETH breakout paired with a clear BTC-D downtrend. Bitcoin's halving, which cuts new supply every 4 years, is a key driver of crypto cycles. Each halving sparks a new bull run, as supply drops and demand rises. Altcoin seasons tend to follow the halving, not start with it. Historically, a major drop in Bitcoin dominance, and the start of altcoin season, happens about 400 days after the halving. With the latest halving in April 2024, history points to a possible altcoin season in summer 2025. While macro factors can shift timing, the halving remains a reliable long-term signal. Combine this with BTC-D and Ethereum's performance for a clearer market picture. The halving sets the stage. The indicators tell you when to act. Not every altcoin rally signals an altcoin season. Individual coins can pump on news or hype, but that's not a market-wide trend. For example, CRO and Pump had isolated surges in 2025, but the rest of the market didn't follow. These moves are driven by specific catalysts, not broad capital rotation. Chasing single pumps is risky. They can reverse quickly if the overall market isn't supportive. A true altcoin season lifts dozens or hundreds of coins as Bitcoin dominance falls. Don't mistake a few sparks for the full fire. Wait for the macro triggers. Bitcoin consolidation, falling BTC-D, and Ethereum leadership. As of October 2025, the market is preparing for a potential altcoin season, but the trigger hasn't fired yet. Don't try to predict the exact date. Watch for the key signals to align. First, monitor Bitcoin's price. A stable, consolidating Bitcoin creates confidence for altcoins. Second, track Bitcoin dominance. Look for a decisive, sustained downtrend. Third, watch Ethereum. Strength against Bitcoin and breakouts above resistance confirm its leadership. Ignore isolated altcoin pumps. Focus on these macro signals. The process is clear. Bitcoin rallies, then consolidates, BTC-D falls, and Ethereum leads. The historical window after the halving suggests the next phase could be near. Patience and discipline are your best tools. Wait for the evidence before acting. By following this sequence, you'll be ready to catch the next true altcoin season.